So Balwant, today I believe you are going to walk us through a very elaborate presentation and tell us step by step what do we need to know when it comes to taxes in India, particularly from an NRI perspective, and what accounts do we need to have as well in order to be efficient.
Government had introduced a special scheme for taxation of uh, income from financial assets for residents who had made investment in foreign currency. This,
Okay.
this scheme is optional for the non-resident. He may opt to be in or may opt to be out of this scheme.
Okay.
This scheme applies in the case where the investment is made by the non-resident in foreign currency in shares of all Indian companies,
Okay.
bonds of all companies except private limited companies, and central government securities.
Okay.
These three category of assets qualify for this special scheme of taxation.
So, for example, if I invest in any one of these three categories, Indian companies or private company bonds or central government securities, in my local currency, which could be pounds or dollars, if I did it in my currency, then this particular provision applies to that investment.
Is at your option, at your discretion. You may choose or you may not choose to go for it.
Why would I not choose and why should I choose? So it'd be interesting to understand that.
So in all cases, if you wish to remain invested, you would choose it because this scheme provides for exemption of long-term capital gain on sale of these assets or three categories of assets. If you invest the sale consideration in acquiring any of these three assets within a period of 6 months, this benefit is not available to resident taxpayers.
I see. Okay.
So you keep on circulating your investment from one company to another company,
Right.
So this is the crux of the scheme.
Understood.
Since it extends the benefit of exemption.
Yeah.
If you reinvest the sale proceeds,
okay,
and gradually you can grow your capital.
Got it.
Without having to pay any tax in India.
Understood. And the only tax you would pay on that would still be if you have any interest out of those investments or any dividend out of those investments, that is still taxable.
That is
for
still
the previous
taxable.
Okay. It's just the capital gains.
Exemption applies to long-term capital gain only.
Got it. And long-term capital gain by definition in India is an investment with greater than 1 year of investment. Is that correct?
No, it varies. It varies.
Depends on the asset. So on equities?
So for listed equities, for listed equities it is 12 months.
Yeah.
Equity mutual fund 12 months.
Yeah.
Debt product 3 years. Land and building 2 years.
Okay. Okay.
If you do not want to avail this exemption, you have to pay long-term capital gain at the rate of 10%.
Okay.
And as you were asking about the interest and dividend, those are taxed at the 20%.
Yeah.
Including long-term capital gain on your other assets other than these three assets.
Got it.
And the balance income, that will get taxed at the applicable
slab. Yeah.
And
Got it.
It is not necessary that you should have all your investment in these three categories.
Okay.
You may have your investments or source of income outside these three investments
categories,
and still you can opt for it. You can opt for it. You can opt for this scheme in respect of your investment made in these three categories of securities.
Okay. So you can have investments elsewhere, but in terms of you using the long-term capital gains exemption, that would be applicable to your investments made to these three categories, and you can avail that. Understood.
Exactly.
Okay.
The scheme provides for exemption from filing of your income tax return, because this is the major headache for non-residents, how to go about filing the ITR in India.
Yeah.
So in case your income, total income comprises of all these three categories of investments.
Yeah.
And
You have opted
proper
in.
tax has been deducted on that income, those incomes. Because
Right.
anyway, the TDS would have been done because
Correct.
under section 195 of the Income Tax Act,
Yeah.
the payer is under an obligation to deduct tax while paying any amount to a non-resident, including an NRI.
Right.
So even if he is paying you 10 rupees of income, he is required to deduct tax on that.
I see.
There is no threshold limit for TDS,
Okay.
unlike fixed deposit where it is for senior citizen, resident senior citizen, it is 50,000. For other taxpayer, it is 40,000 from bank interest, 10,000 for other interest.
Yeah.
Yeah, for rent, it is 2,40,000. Even if you let out your property in India for a
Yeah.
token rent of 1,000 per month, the
Yeah.
tenant has to deduct tax on it.
I see. Okay. So that's the TDS automatically takes care of the tax before money comes to you.
Yes,
Got
yes,
it.
yes. Yes.
Okay.
That was the special provision applicable for non-resident, and which I think is very beneficial,
Yeah.
who wish to avail the benefit of
Investing in India.
growth potential in India and
Yeah.
still do not want to pay tax here.
That makes sense. That's a great opportunity. And
Yes.
how does one file for that? How does one opt in for that, Balwant, for
That
the
you
previous
have to
scheme?
exercise while filing your income tax return,
Okay.
and you can continue to have that option in respect of these investments even when you come back to India, as long as your investment lies in those three categories.
Okay. So even if you decide, if you're no longer an NRI down the road, your investments are still intact and secure from a tax exemption perspective,
Yes,
as
yes,
long
yes,
as they're in there.
yes.
Interesting.
Lots
Okay.
of non-residents and the
Yeah.
NRIs ask me a question.
Hmm.
They are under a doubt
Right.
whether deduction under section 80C is available to them or not. So let
Right.
me first explain what is section 80C.
Yep.
80C is a section which allows you deduction up to 1,50,000
Okay.
from your income in
Hmm.
respect of various expenses like tuition fee, life insurance premium, and various other investment products like PPF, PFs, Sukanya Samriddhi scheme, so senior citizen saving scheme,
Hmm.
ULIPs, annuity, etc. There are a plethora of items bundled together under Section 80C. So
Okay.
the deduction under Section 80C is available to all non-residents, but
Okay.
there are some restrictions as regard the products which they can invest into.
Understood.
So an NRI is not allowed to open a PPF account,
Okay.
but he is not allowed to open a senior citizen saving
Okay.
account under senior citizen saving scheme account,
Yep.
and he cannot buy an NSC.
Hmm.
But once he becomes a non-resident, he can continue to hold this investment and continue to contribute towards his PPF account till his account matures. The PPF account has got a maturity of 15 years,
Right.
beyond which residents are allowed to extend for a block of 5 years at a time.
Right.
But a non-resident cannot extend it beyond this maturity. And
Understood.
if you do not withdraw the money,
Yeah.
then the account stops earning interest on them after maturity.
Understood. Okay.
One good news for non-resident is that they can invest in the NPS account. Have you heard about NPS?
No, actually, it'd be interesting to understand what happens and what does an NPS account stand for?
So since the India does not have a
Is it
social
the postal
security
scheme?
for, uh,
I thought it's the National Postal Scheme. Is it not the?
no,
It's not.
no, it is national pension system.
Okay.
So anybody can open an account under NPS
Okay.
and contribute towards it. The money matures at the age of 60 years. Now they have extended the age to 70 years,
Okay.
which can come handy for your retirement, or at the time of you for a contribution, you get a deduction within 1,50,000 and an extra deduction of 50,000 rupees. And
Okay.
in case your employer contributes, then the employer's contribution up to 10% of your salary is also tax exempt in addition to your own contribution.
But is that NRIs can open this as well?
NRI and the persons of Indian origins
Okay.
have very recently been allowed. Initially, the scheme was meant for only resident,
right?
But at the request of this community, NRI community, the PFRD has made it available to non-resident also.
I see.
This scheme is very low cost scheme. So the fund management charges are in the range of 0.01%, etc. Against the 2% fund management charges of mutual funds.
Right.
So it is very low cost product for accumulating your retirement money.
What does the underlying scheme invest in? Is it typically government bonds, or what does it normally invest in?
So there are three categories, and you have an option to choose.
Okay.
Maximum 50% you can invest in equity.
Okay.
Now it has been raised to 75.
Okay.
And the other balance you can invest in the government security and corporate bonds. Bonds.
Okay.
Yeah. So you have the choice, and there are around 6 pension fund managers in India.
Okay.
To choose from.
Okay.
And you are allowed to migrate from one to two and come back and.
Okay.
So based on the performance of particular fund manager.
Okay.
You can leave or join them.
Okay. And this matures, and this NPS once, let's say, an NRI opens this account or invests in this scheme, they have to make an annual contribution into that scheme until maturity of the scheme, which is 60 years of age.
That is minimum 1,000. And one more beautiful point about this NPS is there is no upper limit up to which one can invest in NPS.
Oh, really?
Unlike your yes.
Okay.
Unlike the PPF or senior citizen saving scheme, PPF has a 1.5 lakh limit per account. Senior citizen saving scheme has a 15 lakhs limit.
Right.
There is no upper limit, but there is restriction on which you will get the tax benefit.
I see. Okay.
So this offers you an excellent opportunity to
invest in India.
Your fund for retirement at very low cost.
Excellent. Very interesting. Okay. So, and there's no upper limit. And what is the tax limit that you mentioned that the tax gets applicable? You can only, if you can elaborate on that.
When you contribute, you get deduction up to 1,50,000 plus exclusive 50,000 benefit.
Yeah.
Since you will be investing as a non-resident, so your employer contribute. The question of your employer contributing to NPS does not arise.
Correct.
But still, if you do not invest anywhere else, you can invest up to 2 lakh to get the tax. You can claim the benefit up to 2 lakh.
Okay.
So you can invest any amount.
I see.
You can invest 2 crore also.
Okay.
But the tax benefit will be restricted to
2 lakhs.
1,50,000 plus 50,000.
Got it.
When the account matures, when you after the age of 60, you have the option to get out of the scheme or extend it till 70 years.
Okay.
So the major minus point is here only. When it matures, 60% of the amount comes tax-free in your hand of the corpus.
Okay.
And for the balance 40%, you have to buy an annuity from an insurance company in India.
Okay.
And the annuity, as and when received, becomes taxable in your hand.
I see.
Like any other annuity.
I see. Okay.
So are we through with NPS?
Yes, understood.
I will share some of my articles on NPS.
Yeah.
And all non-residents can avail tax benefit by buying health insurance premium for their parents in India.
Okay.
If your parents are below 60, you get a deduction of 25,000 rupees for the premium.
Okay.
If the parents are over 60, then the deduction is available up to 50,000 rupees.
Okay.
Yes. In case the parents do not have any health insurance, then you can avail deduction up to 50,000 rupees for day-to-day medical expenses incurred for your parents. But the payment has to be made through banking channels, which I don't think is feasible for non-resident Indians.
Yeah.
Within this 25,000 and 50,000 limit, there is a sub-limit of 5,000 for preventive health checkup.
Okay.
Which you can pay in cash. Otherwise, all the payments for claiming this deduction have to be made in
banking,
by check, banking channel, by credit card or check, etc.
Got it.
One more question which bothers non-residents, especially who are Hindu, is whether they can have an HUF or not. What stands for Hindu undivided family?
Right.
So any person who is either Hindu, Buddhist, Sikh, or Jain,
right,
is treated as a Hindu, and he can have an HUF as a separate tax entity, enjoying separate basic exemption and other benefits available like deduction for ATC or a deduction for premium, etc. HUF can own the property in its name. HUF can make investment in equities and other, but like an individual.
Is it like a trust?
Do everything.
It's a separate trust for
separate income tax file.
I see. So instead of individual accounts, you actually, your family has one HUF account essentially.
One extra
account. File. Okay, got it.
Yes.
What would be the benefit? What would be the benefit for an NRI to consider an HUF? Is that beneficial because you get,
he gets an extra income tax entity.
Okay.
Enjoying 2.5 lakh basic exemption.
Okay.
Then the various deduction under section ATC for 1,50,000.
I
for
see.
Mediclaim 80D 25,000 for family and another 50,000 for senior citizen parents. And if the senior parents are not senior citizen, then another 25,000.
I see. But so then, can he have two accounts? He can have his own tax personal account as well as this, and both of them he has access to, let's say, the premium deduction. He has the basic exemption. I see. So it basically sort of doubles up from a tax benefit perspective.
Yes.
Very good to know.